Hi, this is Michael Waits, and I want to welcome everybody back to AIP, the Asia InsurTech Podcast Live, Beating the Virus. The first thing I want to do is I want to thank Amrit Franzen and the team at AppBand for sponsoring the show and also providing technical support for us. We could not do this without him getting us live on Facebook, getting us live everywhere. That's awesome. I want to welcome and introduce the panelists this evening. We're joined by Stefan Best, Innovation Insurance. He's in Germany. Shefali Sompar, the head of insurance strategy at UST Global, and if I may say so myself, a true insurance geek. She's in India. Teresa Blissing, the founder of the Asia InsurTech podcast. She's awesome. And the director at Accelerate. She's representing Asia from, let's just say, a location that's not really there, but good enough for me. And Brian Falchuk, the founder and managing partner of Solution Partners and the best of the future of insurance. It's great to have everybody here. Brian is right outside of Boston, which is near and dear to my heart. Thank you all. And I want to make sure we make this, we talked about this offline, but I want to say this to everybody else. I want to make sure we make this interactive. Feel free to ask each other questions. Think of it as a roundtable, and everybody can sort of go back and forth, right? Let's just jump right in. And we've been doing this for a while now. It's hard for me to believe it, but it's actually June 29th. 2020. And for those of you that want to get it in early, my birthday is in a few days, so feel free. I used to never talk about it, but now I feel like it's important. Anyway, we can start with whoever wants to start first, but we're still in the middle of this COVID-19 pandemic. And I really want to figure out, since we have really great global representation, how do we think the global insurance industry is responding to this COVID-19 pandemic? And Brian, maybe we start with you. We haven't had a lot of people join the show from the United States. Maybe we start with you to get your perspective.
So I think the outward response is one thing, and it's very focused on the coverages that may or may not be called into question, mainly around business interruption. And that's sort of been the extent of it, other than giving back cash as people stop driving as much because they're not commuting. So that's been probably even more so than the business interruption story in the US has been about the reduction in auto losses leading to cash givebacks or short-term discounts in premiums. So people are getting 10, 15% off their auto premium. Inside the companies, though, it's a very different story. So obviously they have to facilitate those cash givebacks, and that's been a process for some of the carriers. But what it's really been about is first and foremost, the response to working remotely, which a lot of carriers had some form of solution in place, maybe 1 or 2 days a week work from home for certain roles, but most were not okay with that on a broad scale. And they didn't have the tools to really make that work. The last carrier that I worked for, we were totally virtualized. We had our desk phone could travel on our mobile. We had Cisco, for telepresence. We had Citrix for our desktop, so we could connect anywhere. So I found it really easy. And I know talking to some of the folks on my old team, it was just sort of, natural for them. They had all the tools in place. But for most carriers, that wasn't the case. And so for an industry that talks about how slow we are and how hard it is for us to respond, for them to turn around the remote working tools as quickly as they did, I think it was a bit of a wake up. Because not only were they able to do it despite all the, we can't, and this will be 9 months and, 2 days, 5 days later, maybe 2 weeks on the outside, they've done it. I think it was a bit of a reminder that actually we can turn things around faster, and we can be flexible, and we can try some of these new tools, even though we haven't vetted them for 2 years. So what I've seen is this theme is carrying on. So the digitization of how we work, there's a lot of talk about that process accelerating right now as carriers have recognized, A, we need these tools, and B, we're actually capable of using them. So that's a bit different.
Stefan, do you want to jump in and give the sort of German view on this? Or the European view as well, so we can get a different perspective. It's okay if he's not there. Teresa, do you want to jump in a little bit?
Yeah, sure. I mean, if you like, I can also give a bit of a German perspective or a European one. I used to work for Generali, right? The Italian insurer, and I remember my time with Generali. A lot of people requested to actually have the option to work from home, especially those with small children or living a bit outside of the city, or for several reasons. And there was always the excuse like, no, remote work is not possible. And now I know that Generali was one of the first ones in Germany to send all their people into home office. So it is actually possible. It's just a question of do you want it and do you trust your employees? I think it has a lot to do with trusting employees to work from home, to be productive from home. But I mean, Michael, you and I, we are used to working remote, and I think several here of the speakers on the panel as well. You actually realize working from home, you end up working even more. And it's hard to set the boundaries where you say like, no, now it's like 10 p.m. and I should actually, you know, call it a day. So that is definitely something that has changed due to the virus. And I also believe this is here to stay, that insurance companies will be more flexible in, you know, allowing the workforce to work remotely, to work from home. I do believe that it is important to come into the office from time to time. But maybe not every day, to have like designated days where people are coming into the office. Now working with the Asian insurance industry, basically seeing the same. We have also talked to several insurance companies in Thailand, for example, right? What is more interesting is the whole sales process, right? So enabling agents and brokers to still continue with the sales, because I think everywhere in the world, but especially in Asia, insurance is a relationship-based sales, right? Insurance is sold and not bought.
Bought, yeah.
And that has been something where Asia, I think, is a little bit behind Europe and the US in enabling agents with digital sales and now virtual sales. One of the reasons probably is that also the regulator often did not allow insurance agents to sell virtually, right? So, but that is also something that we are seeing as a change. The Thai insurance regulator is now allowing virtual sales, with the exception of unit-linked products. We are seeing similar things in the Philippines and in Hong Kong. Whereas now it's possible. It's just tied to some conditions where you know, like video recordings need to be made in order to prove that the client is aware of buying an insurance product. In the Philippines is even that they have to prove that the person is actually in the Philippines. We just talked about this earlier, right? Where they have like this this funny fix where they ask the client to take a screenshot of Google Maps in order to prove that they are in the Philippines. So these are all like small fixes that we are seeing coming up in Asia. Which cannot be the end solution, right? The final solution here, because they are not compliant with like especially data privacy laws. But we have more and more news that insurers are now integrating this into their like POS, point of sales tools.
Right. Shefali, what's the view from India on this?
So India is a very interesting market. And it has a blend of both what we heard from Brian and Teresa, because we have companies that are native digital, right? In the last 4 or 5 years, they've come out and they're native digital, and then traditional, which are over 100 years old. And then because of the fact that the Indian industry actually opened up for privatization only in 2000, we have companies who are less than 20 years old and anywhere in between that. So the maturity of digital adoption has been varied. Having said that, I always say that that technology is not about the technology of it, but the psychology of it. If the business users and the IT people are not psychologically, culturally ready, you can pump in all the IT money. a lot of it will become technology debt to you. And COVID has created that realization. Just a few months ago, I was having conversations with some of my colleagues in India, where they were talking about, when I spoke about what, like Teresa said, online sales, online servicing, self-service. There was a natural reaction and resistance that said, oh, customers don't want it. The online insurance purchase is less than 1 or 2%, and in some companies only 5% of the total new business volume. So why should we invest in that? And it was always a conversation from that angle. Only a few weeks ago, I was having a conversation with another senior professional, and the tone has totally changed to say, we are going completely virtual. We're doing almost 85% digital in terms of our new business sales. Customer is going to be largely driven by technology. And so there's been a psychological mind shift where the technology was always available, at least for the 3 to 5 years. And we are seeing that tremendously changing. The gap continues to stay in customer experience, which is not seamless. And I think a lot more investment is required there.
So Brian, I really want to get back to you on this, and I'll tell you why. In the United States, penetration is deep. It's very deep across all products, whether it's health or life or even NatCat, like all this kind of stuff, it's very deep. But how does sort of digital transformation change the insurance business? In other words, where is tech really being implemented there? In India, I get it. In Southeast Asia and Asia, I get it. Even in Europe, I get it. But I really want to understand, when you look at the future of insurance in the United States, how does technology play a role? What is it changing, right? Is it changing the claims process? Is it, like, what is happening there?
Well, so I think Shefali really set it up well, because I agree. Look, writing a book about the future of insurance, people are expecting, like, what are the tech points that, like, what's the advice you have on what technology to adopt? It's none of that. It's all what Shefali's talking about. It's culture, leadership, values. So, and then it leads into CX, which is exactly what she was just talking about.
Customer experience, yeah.
Yeah, the customer experience. So there's a couple of major areas, like obviously along the functional chain, claims, underwriting, billing, like they all have their own tech, they all have their innovation. There is a heavy move in claims for two reasons. One is claims is historically under-invested in. And look, I was a chief claims officer, so I'm just bitter about this and I feel bad. So I feel like it's hard for us, but it is true. So for a lot of carriers, claims was doing fine. And, you can innovate all you want, but like ultimately it still takes a certain amount of time for a building to get repaired or a car, it's not about like the predictive model when the physical damage is done.
Right.
I think there's been a wake up to that not necessarily being true, but historically claims has been underinvested in, and that is changing now. And there is a lot of activity around claims innovation for speeding things up, but for better outcomes. And the difference today is, back to the customer experience point, the better outcomes aren't just about lowering your loss ratio. They're about customer lifetime value via a better customer experience. So for the carrier, it may be net zero. They may not actually make out ahead. Maybe it costs them a touch more, but because you see this huge increase in net present value of the customer, of the NPS score, of their customer satisfaction, the referrals to others, the retention, carriers are starting to recognize that. And it's been tricky for claims to make that case in the past. And I think that's gotten easier. So claims, especially functionally, but then otherwise it's broad brush customer experience.
Can we talk a little more about this? And I'll tell you why. We were having a conversation earlier with Teresa, Rahul, and I about some of the news that happened over the last couple of weeks. I'm completely convinced that if you can make the claims process better, right? Because that's where the rubber meets the road, right? It's
the promise of the whole industry.
It's just the promise of the whole thing. Yeah. So I'll use your terminology because I completely agree with you on this. If you can just get people to get a claim really quickly and easily, they'll buy more insurance.
Yeah.
Right. I mean, imagine walking into a McDonald's and going, I'll take some fries, and you get the fries 3 days later. You just never buy fries again. I know it's an exaggeration, but you understand.
No, but it's true. Right? Yeah.
But it is kind of true. So how do you, and this is open for anybody, right? But how do you fix that? And then how do you fix it virtually in the context of, I cannot meet my agent face to face? I have a lot of questions around this. Maybe Stefan, if you want to jump in.
Sure. I think currently you see also the necessity of companies who offer the pandemic-related business interruption insurance, that they can be perceived as partners from both their insureds and their brokerage or distribution partners, who can be reliable partners who really now pay fairly and quickly the claims. I think that is a pretty big challenge. When I see across Europe, for example, there are different schemes. You see in France a kind of fund that is built up by the government with a triple-digit million euro fund that is regulating funds rather quickly. In Germany, for example, you see different schemes. There is one state-driven, state-suggested scheme that gives out 15% of the sum insured for a certain period of time. Okay. Other companies say they reject the claims, other pay them pretty fairly. So take that example, to have a coherent experience in claims handling, even if that is a rather commercial or corporate phenomenon that I'm just referring to, there needs to be a better and a more reliable approach, particularly from the companies in that field, because if not, you see the many discussions going around in Europe where insurers are labeled as cherry pickers who don't pay when it's really necessary and it's really painful. I think that's something that has to be dealt with beyond the technological and the customer experience discussion point of view.
But what about, where does parametric enter into this? And I'll tell you why, right? Because once you get into parametric insurance, it's just based on an event happening. You can't really make an argument that an event has or has not happened. So from a claims perspective, I often wonder like whether all insurance should move to this model where, don't talk to me about like whether my claim gets rejected or accepted. That thing happened, I get my thing, right? And technology can help effectuate that. What do we think? What do we think about this? Teresa?
Muted. Let's try again. Michael, I agree with you. Parametric is a great solution for like automated claims, but you cannot always use a parametric tariff model, right? There are a lot of insurance concept that just won't work that way. That is why, yeah, it is not widely. But I do believe, I mean, even if you're looking at life insurance, like term life, I know a couple of companies are experimenting with automated term life insurance claims. So they have access to the registry, and when someone dies, they get the notification and immediately contact the beneficiary to the payout. So before they have to become active and find the insurance policy and all the details. So things like that are actually possible.
Right.
Can I chime in on that?
Please.
So I think parametric's brilliant, and I think there's a lot of cases where it's not the appropriate solution because there's more than just money at stake. But these are moments where you can really delight and blow the customer away. And so, you know, Michael, when you talked about like it's about resolving the claim faster, yes, except when that's not possible to just do it fast. People would rather it's done right than fast if you keep them apprised of what's going on and you do it proactively. So anytime someone doesn't have to ask for that help, anytime they don't have to go out of their way, and that has been the norm, is people have to chase their adjuster, chase their carrier.
Yeah.
And that's what they viewed going in as like, oh, this is going to be such a pain. When you can flip those things, even in small ways, you end up seriously delighting the customer, and then they become evangelists. They expand the products they have with you. So I think moments like that, it's like, look, you're grieving. You've just lost someone. Right. You shouldn't have to tell us anything. We have the means. Let us figure this out, and we'll be there for you.
So talk to me about this a little bit though, right? In other words, we want to have this conversation in the context of COVID-19, the social distancing, and we're trying to understand how we use technology, but still do face-to-face. In other words, I would love to be having this conversation with all 5 of us in the same room. It would be super amazing, right? We'd all have to travel somewhere to get together and do it. But it's the same thing for insurance, whether it's with your agent or with your claims adjuster. Now it has to happen technologically, right? How do you do that? And then how do you, because you're going to have to use tech You even said this earlier, that is all accelerating. Shefali, feel free to jump in when you want to. But then how do you use that technology to create or recreate that face-to-face experience in a way that makes that CX or that customer experience or the user experience better?
So I'll just give my point of view on the need for face-to-face
Tell me.
in an insurance industry to start with.
Go ahead.
In theory, we are a financial services, by definition, services organization. The service we offer is an indemnity towards a loss that happens on a predefined, contractually agreed peril or a loss.
Fair enough. Yeah.
I understand that to a largely less educated customer base who may not understand the risks, you may need an agent to go ahead and educate them, and therefore some amount of human interaction is required. But contract is issued, the servicing of it and the claims of it can theoretically be largely seamless if we can codify it and bring it down to a certain modular small piece, right? Be it a complex risk like business continuity, which is the hot topic right now with COVID, or a straight line term assurance, which says if you die, you get the money, right? I go back to the example that I think Brian was mentioning about certainty. Financial services industry, let's look at mutual fund, look at investments. Even though the markets crash, we may slow our investments, but we don't lose trust. When the markets get better, we will put in our money again, right? We don't have the lack of trust or lack of loyalty like most customers have in insurance, because they don't have such a bad name of running away with your money. In theory, right? We are not running away. We know that. We are insurers. You and I understand it. But a novice customer who's given money saying, please give me business continuity, and then comes out during COVID and asks for a business continuity claim and is told, sorry, pandemic is not covered. You a breach of trust. Right? And that's where I think the empathy, communication, and clarity comes into picture. That does not very often need human interaction. It needs, like Brian said, extreme sensitivity to customer experience and clarity. I truly believe digital has that ability, because very often our agents don't know these nuances. Had you asked an agent a year ago, is pandemic covered during sales? Chances are he would have said, of course, yeah, don't worry, it's discovered. But that's not really true, right? Now, and that increases the lack of trust and disloyalty, right? I'm not going to sit and read the 400 micro points.
And I'll let you finish in a second. I just want to address this idea that like everything can get handled digitally, right? Because even a couple of days ago, I was trying to just order some food online. And I know this may not sound relevant, but I think for insurance, which is a product that has a certain level of complexity, right? I can check all the boxes. I can, just give all the answers. But there may be one thing where I think like, yeah, so I'm like 69 and a half. I know this is only valid for people that are going to be 70 kind of thing. But like I wanted my salad dressing on the side. And there was no place to put it. And it actually surprised me because I don't order a lot of salad online. But how do you handle those types of experiences in the insurance industry when somebody basically wants their dressing on the side? Do you know what I mean? When they go through all these things, they do everything digitally, they do all the right stuff, and at the end, like, because this is where people drop out. Say it again. That's
what I call the nudge. 80% of the sales cycle, 80% of the servicing cycle, 80% of the claim cycle can be automated, but that nudge is all that's needed. The human intervention and nudge is needed. So you can then have a claims agent or a service agent give that human nudge through a chatbot, through a call, but it's just a nudge. It's not the overpowering force of pressure to do it. Yes, Brian, you wanted to chime in, I think.
Go ahead, Brian.
No, I'm totally agreeing, and I love this term, the nudge, because I think this is right. And I think the idea that we have to do these things in person because we always have, it's like that's the sacred cow phrase to me, is when it says, well, we've always done it this way because we can't right now. And
yeah, but
and that's
not what I'm saying. Just to be clear, that's not what I'm saying. And remember, like my context on this is I basically technologized myself out of a job multiple times. So I understand whether it's from a trading perspective or like I get that. But I'm just saying there are times where those questions arise where humans want to deal with humans. I'm a technologist at heart. So how do you use that? And now it's accelerating. We talked about this earlier. That whole process of technological implementation and digital transformation is accelerating, right?
Yeah.
So how do we use tech to do that? Make people feel comfy.
So definitely not to call you out for being tech averse. It's
okay,
more that, no, but for the carriers, right? So in the same way that we suddenly can't just say, well, you know, we said no to work from home, so we just have to wait this out. You have to recognize that for the customers too. If the right answer or the best historic answer has been like, look, they're really confused. They need that compassion. We have to sit down with them, have them in our office, be able to show them things, whatever. So we just have to wait. And for those, the 20% who are in that nudge category, like we're just not going to be able to service them. That can't be your answer.
No way.
There are other tools. And here's the cool thing about right now, just like you as a company are suddenly getting comfortable with things you weren't comfortable with before with work from home and, you know, virtualization, so are your customers. You know, families are gathering on Zoom, religious events, weddings, graduations are happening this way. I think actually, and I think this is a separate topic, but I think there are a number of industries that will never be the same, like travel, events, things like that, because people are suddenly used to the alternative. So I think the consumption side is going through a change in what they are and aren't comfortable with. And it's up to the carriers and the distribution partners to meet them there and say, well, look, we can't meet in person. We do have to figure something out and work with us. Tell us what you want. Tell us where we're helping and not helping and what tools would be valuable.
Teresa.
Yeah, exactly. I mean, just because you cannot meet face to face at the moment doesn't mean you are losing this human touch. So what a lot of insurance companies in Southeast Asia, let me give you an example from Thailand. Like several Thai insurers, they are using Line at the moment. So the popular messenger app that is widely used in Thailand. And for those who don't know Line, it's not like a WhatsApp, it's more towards like a WeChat. So you can also have like a company profile. It's like a mix between a messenger app and Facebook, for example. So the companies like FWD, for example, but also Allianz, they have their presence on the Line Messenger app, and customers can then click on that and be redirected to their agent and then communicate via the Line Messenger app via like video calls, using the chat function, using the video function, using the phone to take pictures of the ID card for like KYC, right? So you still have this interaction with your agent and also with the carrier, just not in a face-to-face on-site meeting, but we are a video chat and we're using your smartphone to submit the documents, to discuss all the different parts of your policy.
Right.
I'll try and give, if Michael, if you allow me, I'll give an example of
please.
Very recently. My car insurance was due for renewal, is actually due for renewal this 30th. And obviously a lot of insurers are trying to reach me, a lot of marketing calls are coming, and I'm getting inundated with that AI magic that has happened. And, some of the quotes that were coming to me were as less as 50% from my current insurance premium price. And I was like, I'm paying X amount and you're giving minus X amount. So I went back to my agent and asked him, listen, what's happening? What's the difference? So he gave me a full marketing spiel saying, the product we are giving is, we have levels, we have gold, silver, sapphire, sapphire plus, and we're giving you the sapphire plus because everything is covered, blah, blah, blah. And if you want the premium of 50%, we can give you that also. But then please know, here are the things that are not going to get covered. And this was obviously a telephonic conversation. And I said, yeah, I know you're an insurer and I will reinsure with you. But when I see my policy document, this gold, silver, diamond, sapphire, I don't see any of those jewels mentioned. So I renew the policy. And when I saw the policy, nothing was there. I went back to him and I said, listen, I don't see the sapphire plus. And I've still renewed at 50% higher. Because I know the additions you're giving. And it was a very interesting thing. And this happened over WhatsApp, the last conversation. And very interesting thing he said is, ma'am, I'm not at a telephonic or virtual conversation. You have this on record. So tomorrow, if a claim occurs, you can actually show this and say, my agent said this. Now, that is a shift that happened because of the technological non-interface face-to-face happened, because on the face of it, he could have said anything. Madam, pandemic is covered.
Right.
I have a documentary proof on WhatsApp from him that says engine is covered, rat bite is covered, mosquito is covered, blah, blah, blah. So the point is that I think there are advantages that technology can bring to a customer, because now you have a lot of proof of, and the possibility of mis-selling kind of reduces because you have the documentary proof of the conversation.
So you bring up a really interesting point to me. What's your view? Because we used to do this, right? I used to sit on trading desks at Morgan Stanley, UBS, right? And all of our phone calls were recorded. And one day, one of the companies, I mean, I'll tell you what it was, UBS said, you know what, from now on, we're no longer recording the trading desk's phone calls. And we thought, why? The reason was because they wanted to give benefits to their clients and they didn't want to have a record of it. So it was no longer to protect themselves. It was no longer yet to protect the clients, because the client was always right? It was more to protect themselves. So now, when we're doing all this stuff digitally, this is obviously being recorded. But when there's that sort of face-to-face contact between an agent and a client, is it always being recorded? And if it is, does everybody know? And is everybody comfortable with all those conversations being recorded? This is what you were talking about, right? In other words, I don't need to take notes from what my agent said because I can record it. But what's everybody's view on this idea that because it's being done on your laptop or it's being, that it can always be recorded? Is that okay? And do we need to tell people that it's being recorded?
Maybe Stefan can answer this, because I know Germany has implemented a long time ago the so-called Beratungsprotokoll in order to
yes,
make sure that the
I'm curious. What do you think?
Yes,
Stefan?
we did, together with other 27 countries. Yeah, sure I can. With other 27, do you properly see me? I hope I tried.
Can't see you, but it's okay. Keep going.
Yeah.
Okay. Together with other 27 European countries, we got the lovely present from the Brussels people called GDPR. They pretty much tightened that, and from that time on, in that context we're talking about, you have to obligatory ask your client, maybe a commercial client or a private client, are you happy that we take notes? Are you happy that we tape that here? But interestingly, you see a very high quote of people or percentage of people who say, I'm happy with that. And also who are very happy to have video-based calls, that they say, okay, insurance is maybe not the most easiest thing, but if you can explain that properly to me, then I don't need a personal meeting. And I think that is something that will remain also after the crisis. Okay.
And Brian, what do you think about this?
Yeah, so it's the same in the US. In most states, if you don't alert someone that you're recording, it actually becomes illegal. So that's pretty common. And usually you don't have the opt-in, opt-out. If you're calling a call center or something, they just tell you it's being recorded and what the purpose is. But I am seeing it in cases like this. And the InsurTech that I worked for was a communication platform. And so what we saw is actually a decrease in claim fraud because people are texting what's going on with their claim. And so now it's in writing. What I've found, and I think mostly from my time running claims and the amount of E&O claims we had, yes, you can, when something's recorded, it may help, it may hurt, depending which side of the coin you're on. But what it does do is it removes the ambiguity, and the ambiguity is where the problem actually comes from. So, you get into that claim and the broker told you it would be covered and there's a record of it, or the broker and the underwriter discussed it and the underwriter said it'd be covered and there's a record of it. Even if it shouldn't be covered per the wordings in the policy, we have to cover it. And I've now saved myself losing a customer, angering a broker relationship, getting an E&O lawsuit triggered. I mean, the costs and the frustration and the loss of business that ensues is far greater than the loss from the actual claim.
Right.
9 times out of 10 or more. So for me, I would rather be on the hook I would rather have that clarity, whether it works out in my favor or not, because the mess from that ambiguity, I mean, it's the same reason why contract wording can be so arduous to get through. It's because when you're in the midst of it, that's not the time to figure out how to work through it.
No.
So I'm one for recording, but yeah, you need to be upfront with people, and you can turn it into an asset. Is, hey, I'm going to record this. I'm going to also provide that to you. So if you don't remember later, you can come back to the recording and you'll have it there.
Right, and that was actually the point that I was trying to make was,
yeah.
Right, the companies can easily record because they've always had the resources to be able to do that, but the consumer hasn't until now, and now they can. But I do still think, just as like the companies have to close the fact that they're recording, we should record that as well. Should report that as well. Hey, look, so you know, this call is being recorded, and act accordingly. Anyway, I want to talk a little bit about business interruption. Do you
Just
want to say
one second, Michael.
Please.
Something that I want to mention, like in the US and in Europe, Stefan just mentioned it. We have like GDPR, and we have fairly strict data privacy rules also in the US compared to like most countries in Southeast Asia. And I think because why haven't agent used like digital tools to sell insurance in the past? It's not that the technology wasn't there, like Shefali mentioned this before. It was about changing behavior and getting people to use these digital tools. Agents were always scared to lose their customers.
Right.
Now they have no choice. And now with the virtual sales and the lack of technology available from the insurance companies, a lot of agents start using WhatsApp, using Line, using private channels to communicate with the customer. And that's like the new behavior they are learning.
Yep.
But that is not really in line with data privacy laws, and in a lot of countries they are also now getting stricter. So the longer an insurance company is waiting now in Southeast Asia to implement like a solid solution that helps their agents, they will be struggling with unlearning this behavior again, where agents now figured out, okay, I can use my personal WhatsApp, I can use my personal Line account to sell insurance and have the conversation via this channel.
Yeah, and look, we saw this all the time, actually, and I'm talking 15 years ago in the financial services business, right? In other words, we could not do deals on Bloomberg chat. You could never say none, you could never do that. And yet at some point, and I can see him shaking his head like, yep, but at some point the firms just gave up. They were just like, that's where all the conversation takes place. If you can do it on the phone, and it's recorded. Once they figured out how to record that, they just said, sure. If it happened on Bloomberg, it happened, because that's the way we communicated on Bloomberg IM. If it happened on the Messenger, that trade just happened. So same things happening in insurance. Yeah.
No, but if you're looking what is happening right now, like people sending a picture of their passport, of their bank account, to private WhatsApp accounts, that is something that would never. It is easy. It is convenient, right?
Yeah.
It's scary at the same time, for it opens for misuse.
Absolutely.
Say that again, Shefali. I missed that.
I said, if you're sending it to a personal account, which may not be authorized from the organization,
right,
it opens you to misuse.
Yes, and that's like a real liability now for a lot of insurance companies, right? So how do they get this under control?
Yeah, but this comes all the way back to that question of the line blurring between, and we talked about this offline earlier, right? That your professional life and your personal life, where's the line drawn? It's really hard to tell anymore, right? In other words, should I do that on my personal Line account, or do I need a special Line account just for my insurance policies? And then do I need a Line account for all of my customers for the different businesses in which I work, or just one? Right.
So that's where I think the organization enables you, right? If and you're saying Line, we have WhatsApp. India is very WhatsApp enabled.
Yep.
So organizations have what is called business accounts, right?
Yep.
And business account has users. So authorized users. So when I respond to this insurance agent, it said he is. It's a business account. Same way you can purchase things on WhatsApp. But if I see it's just Michael only, I will then turn around, hey, can you tell me a little more? And I think it's also about customer awareness, being cautious. But I say Michael Waite's authorized business account API, then I'm a lot more comfortable to speak with you on that chat, because then legally you're professionally held liable, right? And even if you do leave API and go, API is still liable because there's a professional account there. So
Yeah.
about a little bit about customer awareness. And we do tend to think our customers are not as mature, which sometimes we are not right about. I think a little bit of help and the customers are actually quite aware. India, for example, we've had mobile payments, digital payments now for 5+ years.
More, yeah.
Yeah, I'm saying mature version of it.
Yep.
I can tell you from experience, my own personal experience, when I'm in India, I don't carry any cash at all. And I'm not talking credit card transactions. I'm talking on mobile pocket wallets. Just load the pocket wallet on my phone, and through that, I make payments. It's a small thing as 5 rupees or as big as 5,000 or 20,000 rupees.
Right. Go ahead. Sorry, I really want to get the European and the American experience here, and I'll tell you why. I was a KOL for Huawei at the end of 2018. I can't remember when it was, maybe 2017. And I remember being at a convention center in Shanghai, and the woman in front of us who was ordering coffee literally just like took her phone and went just swiped it like this. And looked at, and she looked back at the rest of us and she was like, in our country, we don't carry cash. She was just like really making fun of us. But I don't know what it's like. But I don't know what it's like in Europe. I'm putting my hand over here because that's what Teresa is, and I don't know what it's like in the United States. So I'd love for both of you to comment on that, because I believe that India is probably further ahead and China is probably further ahead. Brian, what is it like?
Way back.
What is it like in Boston, though, when you go into, I'm really curious, because the payment thing can also help on the insurance thing, right?
I think the payment thing, yeah. So last time I went to London was 2018. Okay. And we all, we had like a global claims meeting. We all went out for dinner and we got on the tube and they all just passed through, and then I get stuck and I'm like, oh yeah, I don't have an Oyster card anymore. And they're like, oh, just use your credit card. Well, I have a US credit card and they don't have the NFC payment stuff. And they're like, oh, just use your phone. I'm like, oh, we're just now getting those things. The US is definitely behind on this. No question.
And Teresa, in Europe? You're muted.
Again.
You're muted. Yeah.
Yes. Maybe Stephen can also comment on that. Yes, but Germany is definitely behind. It drives me crazy. I mean, it's still a very cash-based society. I know they say this about Thailand, but sometimes I think Germany is worse.
Stefan, what do you think? What's your view on this?
I always try to bring a continental European approach or a view to the table. My impression is, hate it or not, that the insurance is not that great and that sexy and that high priority product, that people take so much pride in using the latest payment methods. They are really fine with the insurance company, maybe an incumbent or InsurTech, takes the money on a frequent basis from their bank account. That's pretty much it. When it comes to situative or to adaptive insurance forms, that's be another story, but that is not yet the regular case.
Right. So here's something about it. It's a little bit of a segue, but and Brian, this may be interesting to you as well. We're seeing a lot of these payment companies. We see it in India, right, through Paytm, and we see it in Southeast Asia through some of the payment companies here. They're all trying to get into the insurance industry because that's where they see margins for profit. Payments as a pure business alone is a super low margin business, right? I'm curious what you hear. Go ahead, Jason.
You also have to consider it's a very different market, right? So in Asia, where we find, it's mostly around micro insurance, or it's now embedded into like the Grab and Gojek. That is something that resulted from a large unbanked population, about micro premiums. I think in Europe and the US you find just a different infrastructure, a more mature market, more saturated markets. That's why I think the e-wallet and mobile payment is not as significant for the insurance industry in US and Europe compared to what we are seeing in Asia.
Yeah, probably. I'm just
Brian,
trying to make that
comment
distinction.
on that.
Yeah, and I think the other piece of it is having a lower percentage of people who are unbanked means you can institute things like automated payments or credit card payments in an automated fashion. And I can tell you firsthand that when you do that, your retention rates are much higher. Because anytime someone has to make a conscious decision, even if it's simple and just waving a phone, that's a chance for them to not make that decision.
Right,
so
to not do it,
much higher payment cost, and the ability, the institutions built up over decades to go with the automated route that people then don't think. And Americans are, I will say this because I'm one, we don't like to think. We just like, can we just do it and not spend any time in it? Because no one likes insurance, so they're not doing that. It seems to be much more transactional in Asia. And I think that's why I feel like Asia is further ahead on a lot of these CX innovations that would just make life nicer if we had it in other countries.
I want to go ahead, Teresa.
No, I was just wondering, what about like embedded insurance into some of the like the super apps or the ecosystems? For example, Grab, the ride-hailing service from Singapore, who is operating across Southeast Asia, is now offering micro-insurance to their drivers, which they can purchase via the app. But also like travel insurance for the users. Like, for example, they are going to the airport, which is at the moment not too often. But at the beginning of the year, that seemed like a good business model. So they have the chance to buy via the Grab app, like a travel insurance. And that is something that we are also seeing in India, in China, where like insurance companies partner with ecosystem and have this like contextual insurance where it's like embedded in the service. You're seeing this in the US and also Stefan, you're seeing this in Europe?
I think in the US, we have the single technology, and I'd say this historically across the board. So we have ride hailing, or we have, whatever single thing. Yeah. When I see something similar evolve in Asia, people are thinking more holistically, even messaging. Yeah. So we were much slower with text messaging, but once we got it from an app standpoint, it was the single purpose app for messaging. You go to outside the US, and I mean anywhere outside the US, it's WeChat and I see, like, we don't like Line. Nobody has Line here unless they came in from Asia and they're messaging with people back in Asia. I mean, none of these things, all my European friends are using WhatsApp and things like that. And that's the only reason I'm on it. So we don't think as holistically about technology in the US, thinking about, well, how can this be the basis for everything we do? I think it will come, but we're not there yet.
I'd like to add that I think, and I'm a little bit of a, like Michael initially said, I'm a little bit of a nerd. I like to think why, what happens. Regulation also has a lot of part to play with customer behavior. In America, a lot of insurance has been regulated and mandated, whereas in Asia, it's been very elective. Except for motor, at least in India, except for motor, nothing else is mandated.
Except for motor, yeah. So
in large parts of Asia, a lot of things are not mandatory. Health insurance very often in Asia is not mandatory. So the insurance companies really need effort to be available and visible to customers, which then they think, how do I reach the customer? What do I do? They still don't think of customer experience. I will say that again. But the top line part of it. And I think regulation to that extent, while it has done tremendous benefits, and I've had the benefit of working in US and Europe and seeing that the foundations are so strong of American and European insurance, which is not true of at least some of the Asian insurers I've worked with, has done disservice in that point, because that has caused a certain sense of complacency. Because I've got my top line, I've got my renewal happening. I don't need to make that effort to pull the customer. Whereas, for example, and coming back to your point, Michael, if you're talking about a lot of these companies, and I'm talking things like Ping An, I'm talking things like, you said WhatsApp, I'm talking things like Policy Bazaar, they're all looking at brokering. They are not looking at the risk aspect of it. They're not absorbing the risk. They are just acting as the commission as their source of risk. The foundation of risk appetite continues to be the 7, 8, 12 insurance companies. be it China, be it Singapore, be it Asia, be it Thailand. And for me, making that ecosystem robust is more important, which in America and Europe is. The MetLifes are strong, the Prudentials are strong, the insurance companies are strong. Whereas here and in Asia, the intermediaries are using technology to sell to the same customer and frustrating that customer.
So Brian, I want to get to you on this actually. How do you see the risk part? This is Shefali brings up a great point, and Stefan, maybe you can comment on this in Europe as well. But how do you see the technology that's being implemented changing the way insurance companies look at, analyze, and manage risk?
Yeah. Well, so I think Shefali raised a really good point. I think the difference in the fences that insurers grew up with or didn't grow up with between the two geographies, and the two being US and sort of Europe in between, and then Asia much more free, is I think about protectionism. So the US carriers were protected, and so they stayed very myopic on themselves. And in Asia, it's, well, look, we're all fending for ourselves. We have to, eat what we kill. We need to partner because we won't survive if we're alone. And so it's like in the DNA of the companies from the start. You must look around, you must think of others, of how can you work together. And so it's not surprising to me that you see that sort of ecosystem approach. And I think that translates to how you look at risk. So if you're thinking ecosystem, you're thinking, what does the population using this ecosystem look like or not? Right. And what does that mean for risk profile? So in the US, we have a lot of affinity-based marketing. They target in on like an accountant's group. And so, because accountants look like this from a risk profile, so they're better, and whatever, doctors, whatever it is. I think there are other ways to do it. And it's based around all the things we see with like, what Facebook does for ad targeting is about behaviors. Just because you have a certain degree or you went to this school or you whatever does not really mean that's a clean enough read on you as a risk. It's a presumption-based read. And 80-20, it'll be fine. But what if you actually can do something that tells you about what this person's behavior looks like? That's where I see the Asian approach really honing in. It's turning the affinity business on its head.
I want to get back to behavior in a second. I want Stefan, you're back on the video, so I comment on this.
Yes, when it comes to risk, which plays an extremely important role. Also, interestingly for the InsurTechs, where technology is in the front line and customer centricity as well, but as it's very hard to get the regulatory green tick to operate, and you can lose that also pretty fairly. And we see examples here around. So therefore, risk management is very important when you deal with people, when you try to win new customers. And the risk of not doing that are high, and the fines or penalties are really tough. So that plays a very important role here around Europe.
Got it. Teresa, did you want to say something? If not, I want to follow a little bit. This whole concept of behavior, we all now have, these supercomputers in our pocket, and you're carrying, it records a lot of your behavior. It records your location. It records, the places that you're checking in, all this stuff. How does that play into, we can go down the whole of how does the data that you accumulate on yourself help you then manage risk on your own insurance, and how do insurance companies look at that, and can they actually access that data if you give them access to it to start pricing insurance using that
that's again
data?
That again really depends on the region. With GDPR in Europe, it's really difficult for insurers to collect these like behavior data. I know that Vitality, like the wellness program, which is run by AIA in Asia, has been adopted by Generali in like Central Europe, and they are partnering with a data analytics company in the UK. So like the behavior data is collected by this company in the UK, and they just give like a scoring back to Generali in Germany, for example, right? Because Generali is not allowed to keep this health data and behavior data from their clients. And also people in, especially in Germany, are very critical about, collecting data. That probably goes back to the German history. But if you look at Asia, it's a whole different story. Like, people are, first of all, not that concerned on sharing data
at all.
And also a lot of the data privacy laws across Southeast Asia are not at a level where you find them in Europe. So AIA in Thailand, for example, they're allowed to collect all this data firsthand from their customers, whereas in Germany, that is not possible.
Okay. Does anybody else want to comment on this? Because the last thing I want to talk about is, it's something that people have touched on during this entire conversation, but business interruption. I want to really get a sense from what people think about when they're thinking about business interruption insurance. And I will say this, I just looked to the left, and if you could see the sunset here, you would all be dying. Anyway, it's so beautiful. And remember, there's no pollution, right? Because there's been for 3 or 4 months here, so it's just natural. Anyway, I want to understand this concept of business interruption insurance. With the internet being the biggest driver, right, and technology being the biggest driver of business, and it's just going to happen more and more and more. How do we look at business interruption insurance, particularly in the context of COVID? And I'll tell you why, because if things are going to get done remotely and you're working from home, your internet connection needs to be rock solid stable, right? And I've been in plenty of situations. My entire business is based on me being able to do this, right? And if the internet's down, I have nothing. I'm curious.
Don't try coming to Germany then.
Yeah, but you say that, and we laugh about this a lot, right? But I mean, I'm sitting in a place where you can say whatever you want about True as a phone company, but I mean, I have 500, 600 megabits up and down in this office. But I'm curious the way somebody in Boston perceives internet connectivity, and somebody in India, and then Stefan, you as well. Maybe Brian, you can comment on this first, and think about insurance around that business connectivity and business interruption.
Yeah. So 2 things. Business interruptions historically been a property exposure coverage, and that's where the debate is right now: is it covered or not? And generally, it isn't, unless it's explicitly called out or you have pandemic coverage. The other place, and actually having been responsible for cyber claims is one of the buckets under me when I was running claims. Cyber has business interruption, and that's what we're talking about. And it's actually broader than just an attack.
It is
generally. So that's where the uptime matters. And I think COVID-19 has maybe not been the nail in the coffin for the brick and mortar world, but it's certainly pushing them further that way. So I think we'll have even more internet-based transactions going on, and the economy tied to the internet stronger. So one is the cyber coverage, and I think that's one the industry is aware of, but perhaps a bit asleep on, just how much of a broadening of exposure they're inherently absorbing as the world moves more online. So that's one. The other is, I think this is a space for parametrics.
Yeah, absolutely.
So just like web hosting, they report their uptime, and I never believe what my host says because I seem to be down more than they claim. But this is one where we can measure it. So, is there a device in your home gateway, your home networking hub that reports back, and look, if the bandwidth hits this threshold for this amount of time or below, boom,
I should get paid.
A check. Your flight delay, like BA just paid me when we were delayed. It should be that way. So it's not there yet. But that's one I'm really curious about is there an IoT parametric combo here that could be part of an ecosystem of your home work remotely tech solution? It's got all your connectivity, and it's measuring it, and it's paying out if something fails.
Right. Teresa, you're laughing. What do you think about this?
Oh no, yeah, absolutely right. I'm just no, it does exist. Now there's an InsurTech out of Switzerland, Michael Riskwolf, right? They are looking into this parametric solution. No, and another thing that I was also thinking about with connectivity, coming back to the whole sales process in Southeast Asia. you know, it all works in the big cities and selling virtually, etc. But as soon as we come into the rural areas, if it's Thailand, if it's the Philippines, Indonesia, and maybe even India, Shefali, you know, that's where you know it stops working because there's no connectivity there, or not enough to do like video calls, etc. And I think even in some parts of Germany that is the case. Where, but you know, this is something to be fixed by the governments now and by the telco services. I think that we will also see an uptake in connectivity in general because it becomes more and more important.
So Stefan, what's your view on this?
I think we first need to get the coverage right. When you see this COVID-19 discussion right now, then you see what we had 10 years ago with the so-called non-physical BI discussion, where it was a question that if a non-physical trigger was the starting event of an insurance case, and this we have first to discuss, and I think optimally on the regional or global level, to find appropriate cover for that, and afterwards we can discuss the question how we can get that in the field. But one thing to mention is there were few players. I can remember Zurich Insurance Company offering that in North America and in Europe both offered a part solution for non-physical BI solutions, and which it took out of the shelves after the corporate buyers were refraining from buying so. So the question is, there is a need of coverage, but is it also being demanded on the buyer side? This is also something we have to discuss very openly and need a good solution for that.
Yeah, so Shefali, I'd like your opinion on this as well, but I do want to make this point that when we started getting real-time data on trading desks and could feed that real-time data into algorithms to make better trading decisions, it was a lot easier to trade efficiently. And I think the same thing is going to happen in the insurance industry. We haven't talked about how real-time data is going, whether it's weather data, internet uptime data, or whatever, is going to impact the insurance industry. It can also be real-time health data. There's plenty of places you can get this data, but it needs to be in real time. And how it's, but we can talk about this maybe on another one of our AIP lives, but how it's going to impact pricing, how it's going to impact parametrics, all this kind of stuff. But particularly when it comes to internet connectivity and outages, we all know if this call went down, it would impact all of us. And I've actually been on a call like this in this room and the internet went down. Anyway, I just think that whole concept of real-time data aggregation and real-time pricing into that is going to be important because we've been doing that in financial services for the last 20 years. Shefali, do you have a view on this?
So my view is that I think this has been a very, very unique situation all of us have been kind of thrust into. I don't think any employee of any organization, let alone insurance, would have imagined that they would have needed the kind of bandwidth we needed and to do the kind of work that we are expected to, right? Infrastructurally, our houses were ready for it. So when my husband all of a sudden started working from home, my daughter started doing online classes from home, started going online, the amount of bandwidth I needed at home was not normal, and my internet provider could not immediately ramp up. It took a few weeks, and I think most people in most metros and large cities across the globe, I would say, have been able, and I've spoken to people, I speak to people in US, they all said it took about 2-3 weeks because everybody had to kind of upgrade their right, and also from a pipes point of view, the residential pipes are not as good as the commercial pipes, right? So when I'm working with in my insurance company or my IT company, my infrastructure is set up for that kind of bandwidth. Even internet companies had not got that bandwidth ready. So I think infrastructure has supported us over the course of time. The kind of podcast we are all doing today may not be the best quality in terms of, there are breaks, etc., but it's much better than what it had been maybe on the first week of March, right? But going forward, I think all of us are going to plan for this. Organizations are going to plan for this. Organizations now, as we are getting into more mentally being psychologically, as I started by saying, mentally prepared for working from home and being a virtual organization, will now enable that. And so employees will employ that also to be ready. Most people will start having, an office space at home where they can sit and work sounds, which may not have been available earlier. So we're going to change that ecosystem at home. We're going to change our structure at home. Where I feel we again will get dragged down is going to be our inherent legacy processes and mindset. I think the industry is ready for a true adoption of digital transformation, and in this sweet spot we are in. I really urge all insurers listening to us, InsurTechs listening to us, CIOs listening to us, COOs listening to us, to use this time while everybody is mentally prepared for it, to look at rehauling your operations to be digitally ready. We need to break down our earlier conceptions of what new business was, what policy servicing are, what claims is, and because in my mind, when I look at digital, it's seamless. I don't see a different department when you're moving from sales to policy to claims. It's the same thing. It's a continuity as far as customer experience is concerned. Let's use, you really need to employ design principles of design thinking now. It's been too long. Let's actually do it. Whiteboard our design thinking, put the customer in the center, and invent our digital enablement for the customer. Our risk management is robust. Regulators will not allow us to falter in a lot of places. Let the operations adopt digital from a customer experience point of view.
Perfect. Look, we've been at this, Teresa, go ahead, but I just want to say this. We've been at this for like an hour. I don't want to keep this going too long. I feel like we could keep going. Do you want to have the last word, Teresa?
No, I just had a look at like the live chat, and there is a question for Shefali on what about new InsurTechs in Asia, for instance, digital insurance. I think that question is a little bit about what you were just describing. Do you, from your experience, are the new InsurTechs, the new digital insurers like ACO or Digit in India better prepared? Are their business models ready for what we are facing right now?
I think ACO, Digit, who are inherently insurance companies and not policy bazaars, etc., who are, I'm keeping them aside because they're brokers, yes. Are digitally native. So they have actually grown up from using digital as their model. So their products are a lot more different from what a traditional insurer gives. Having said that, because of lack of experience and a certain amount of resistance, and I'm saying this over here in an open forum because I've done a little study with my recent, buying car insurance, the products are not comparable. The prices are, but when you go down and see the slivers of it, I don't think they're mature enough yet. I love the digital adoption. I love the experience, but I don't see the maturity in products and the maturity in delivery of those products. So the older ones have that advantage. The new ones have this advantage. They need a balance. I again, just last came as a back thought, but I go back to the original point that we had, I think Michael and we had that podcast where we said, you need business people. There needs to be a new generation of employees in the organization, which we need to nurture or inherit, whichever way we want to do. We need business people who are digitally savvy and digital people who are business savvy.
Yeah, you have to, because otherwise they're never going to meet in the middle. It's just going to be this like parallel line. Yeah,
and they'll keep talking to each other and not work for each other.
Fair enough. Okay, maybe that's the best way to end, unless anybody else wants to have the last word. No, this was awesome. Let me just thank everybody who's doing this. Let's just go back through the people that are here. So Amrit Franson and the team at AppBand, thank you so much for sponsoring the show and just making it possible technologically. Stefan Best, net replacement, awesome insertion. Really great to have you here from Germany, Innovation Insurance.
Thanks.
No, thank you very much. We should do more actually. Shefali Sompar, incredible, head of insurance strategy, UST Global, and like you really are a pretty good geek. I feel some kind of symbiosis there. Teresa, I don't know what to say about you except thank you. You're awesome. And Brian, Amazing. The founder and managing partner of Insurance Evolution Partners and best-selling author of The Future of Insurance. I mean, we should do more with you as well. I just really want to thank everybody who's here and who gave questions and participated in the broadcast. It was really great.